Hello and welcome. We are responding to some requests about how to identify the best opportunities on the ASX and when to invest as momentum traders. And it's not using the index, which most people use. So what we're going to do is share the momentum profile, something that we've created and now members have access to on the channel. So we're going to share this by opening that up so you can see full screen and then move my picture up and out of the way. This is something that if you want to see, you can join on the YouTube channel to get access to it. But what we're looking at here is the momentum profile over the last 12 months. The top left-hand chart, the blue line represents the momentum profile on a daily basis. We can see that it goes from lows to highs. The highs do correspond with the index and the low does actually correspond with the index, but that's not always the case. And we're going to show that the best times don't actually correspond at all. We'll share that in a second with another chart, but we need to understand this a little bit more so that to make sense. So momentum profile over the last 12 months. I challenge if you're a momentum trader to look at this list and use it. If you have been trading consistently and regularly over the last 12 months, I dare say the best time where you're getting the best trades and the portfolio is growing the most, the week with the best percentage performance, is going to be sort of October, late October into early November. And then what we've seen here, June through to, well, the end of July. And Gary Glover confirmed that with saying that he's had the best sort of period, 6 to 8 weeks in a very, very long time. I've plotted it along with his and it seems to stack up. It also stacks up with my own and much other data that we've used. So I challenge you to use that. We can see that from the close of, what was it, the 5th of August, the momentum profile was better than 76% of other observations we've seen in the last 12 months. Okay, so that tells me it's sort of above average, but not a massive opportunity, not something I want to lean into. So that's falling sort of around the midline, if you can imagine, and that's the orange line showing the most recent observation right here on the far right-hand side. It does sort of look like a bell curve if we look at all the observations in the last 12 months, but not. Because it's financial markets, we expect fat tails. Except our fat tails in the momentum profile, they're up here to the right-hand side. This is where we want to identify the best opportunities, pushing out here to these rare glimpses. So that's where we're above the pink line at the very top, and that's where we're sport for choice. When we're looking at the market, we have consistent, just huge amounts, huge volumes of opportunities coming in front of us. Breakouts, and then when we are invested, we're having to filter through our capital, we're selling into heat, we're taking profits off the table, cycling the capital, opportunity after opportunity. They're the A plus and A double plus setups that we really just have to split hairs to pick the opportunities, and we have so many that we just can't be invested. That's these opportunities up here. So why does that not correspond with the index? Let's have a look. So the other tab that members get to see, and this is updated at the same time, I'll move my picture to the left so that you can see. These are the optimal trading conditions, and this is over the last 5 years or so. The peaks, the highs, the lows of the momentum profile were actually seen throughout the period pretty much 2021 to 2022. So if you remember the COVID lows, we've got that on the left-hand chart here, coming from the COVID lows of March 20, rallying up to highs, and then what happened afterwards is really interesting on the momentum side because it's not what most people expect, particularly those who use the index as an indicator for the best opportunities on the market. So the chart on the right, the green dotted line is where we are today, better than 76% of observations in the last 12 months. That's pretty standard. But how does it stack up against the best opportunities in the last 5 years? Nowhere near as good as what we would like it to be. So having a look at the top here, we've got pink and purple. The pink is the absolute best opportunity we've seen in the last 5 years. 4 days before it, well, this is just to give you a gauge of how quickly that can change and how extreme those levels are, is the purple line. So we'd expect them to be sort of when the market's peaking, because at the bottom here, we've got the worst opportunity. This is the light blue line, and as we kind of expect, it does correspond with the market low. After the market's fallen for about 12 months, on the left-hand side, look at this little blue arrowhead, that's the date. So the market has been falling consistently, and that's near a low. Okay, that's to be expected. So then wouldn't we see the pink and the purple, the best opportunities, which are magnitudes better than anything we've seen for the last 12 months, wouldn't that be at the top of the market? Well, not really. The top of the market is that orange day. Well, that's pretty standard. In fact, it's actually worse than what we saw yesterday. So that's no good. The index isn't showing us a good indication of where the momentum opportunities are or how good they are. The pink and purple are actually after the market's fallen for the best part of 6 months. It's been volatile and it's just come off its lows. If you remember trading then, we had uranium, lithium, and a lot of different thematics shooting the lights out and running strong. How strong were those opportunities? Well, the best trade that we've seen on the ASX in the last 12 months, the highest momentum score that we've seen, wasn't as good as the 30th ranked momentum score on those days. So that tells us that there were more than 30 companies that were better than the best opportunity we've seen on the ASX. And there was weeks and weeks of that consistently being up really high. So that's how we use this, not the index, but we use the momentum profile to know not only when is a good time to trade, but how good is that opportunity. So when we're up in these pink and purples, we know that's a time to leverage, to lean in, to get every opportunity we can, to trade the breakouts. When there's a setup and it looks like a pocket pivot's breaking, a cup and handle or a VCP, we lean into that because the probability of us getting that extra gain, that 10, 20, 50% rally, is significantly higher than when the market conditions aren't as good, which is what we've had for the last 12 months. Yes, there are a handful of times that it has been okay, that the momentum profile has been good enough for good trades, and yes, some good money has been made throughout these markets, but in comparison to the best opportunities, nowhere near it. So the blind monkey throwing darts at the dartboard is not making money in this market in the last 12 months, but it did in those COVID times. And that's how we can compare the absolute best and optimal times versus really good times that we've seen just in the last 12 months. This is how we're monitoring it. Share with us how you're doing it. If you've got a better way, people use power trends and that kind of thing, index-based, share with us. Let us know because we want to learn more, and we'd love to incorporate it. So have that conversation below. We'll comment or respond to you and hopefully learn something. And remember, this is for the members, so going to the website just won't do it. There is a password, so join if you want that password. And for the month of August, those on the lowest level membership are getting an access to this beta version